And do we have all our attendees here? Okay, we're starting the meeting of the Finance and Audit Committee, Subcommittee of the Board of Trustees, Santa Barbara City College, December 7th, 2021. And I think we should pause for our public comment first. Do we have any comments, Jasmine?
I didn't receive any, no.
Okay. And then I believe, Lindsay, you were requesting we take an item out of order. Did you want to say anything about that? You're on mute.
Yes, please, if the board would be willing to take item 2.3, our draft audit reports, out of order, as our auditors, Bill and Ryan, are here to present on that.
Okay, it's fine with me, Anna and Jonathan.
Fine.
Okay, let's go with item 2.3 first. So Lindsay, do you want to introduce it?
Sure, I can do that. So we have our auditors here from Eide Bailly. We have Ryan Milligan and Bill Roush. I'm not sure which one of them are going to do most of the presentation here, but they've come to us multiple years in a row now to present to typically the full Board of Trustees these reports. So we appreciate having them here for this new subcommittee meeting. Tonight, we do have attached to the agenda, and we will be presenting a draft of our audited financial statements for the district, and also for our parking fees, which has to be done as a separate report. And we will be presenting the final financial statements to the full board at the next upcoming board meeting. And I'm going to let Bill take it away.
All right. Well, thank you, Lindsay. Good evening, everybody. It's a pleasure to be here. Again, my name is Bill Roush. I'm a partner with Eide Bailly, and Ryan Milligan is also on the line. He's the senior manager with Eide Bailly, and he was the one that basically took charge of this audit and led it throughout its course. I'm not sure quite how much detail everybody wants to go into, but I could talk about this for hours, or I could talk about it briefly for about 5 or 10 minutes. So I'm assuming you don't want to have me talk about it for hours. So I'm going to give you some highlights. And then if anybody has any questions, feel free to stop me as I'm going through it, or you could ask me at the end, but I'll be happy to answer any questions that we might have. Like Lindsay said, this is basically a final draft. Right now, we're just going through our process of a quality control, sending it through spellings, mistakes. We're having second partner review it just to make sure that we have all the required disclosures. But it's pretty finalized, but just want to let you know this is not the final product. We are still making minor changes to wordings and stuff like that. The numbers are the numbers. The numbers aren't changing of that sort, but just want to let everybody know that. Basically, if you flip to page 1, and thank you whoever put that up on the screen, I appreciate that. On page 1 is the independent auditors report, and this is the opinion on the financial statements of the district. As auditors, we basically give 3 opinions. We give one over the financial statements, we give one over the federal awards, and we give one over the state awards for compliance areas. And this is the opinion over the financial statements. As you see here, it details what the report's on, what's management's responsibility over these financial statements, what's the auditor's responsibility. And then if you go to page 2, it has, most importantly, where it says opinion right there in that second paragraph. And it says, in our opinion, the financial statements referred to above present fairly in all material respects the respective financial position of the business type activities of the district as of June 30th, 2021, and the respective changes in financial position and, where applicable, cash flows thereof for the year then ended in accordance with accounting principles generally accepted in the United States of America. This is commonly referred to as an unmodified opinion. That's the cleanest opinion that we can give over the financial statements. It's also the highest level of assurance that we can give. That basically says that the numbers that we were provided by the district, that they are materially correct and that they're in accordance with generally accepted accounting principles. And so that's the opinion you want to receive on your financial statements. will notice something a little bit different this year. Underneath that paragraph, there's what we call an emphasis of matter paragraph. And that was due to the adoption of a new GASB that came out, GASB number 84, fiduciary activities, which basically it didn't really affect how the district managed some of those fiduciary funds. It just was a matter of reporting them in the audit report there. So we basically took those fiduciary activities, kind of like student rep fees, scholarships and loan, and activities like that, and we included them as part of the government-wide financial statements and not put them on a separate statement of its own fiduciary funds. And so just a little different presentation, which is in every single community college district that you'll look at in the state of California will have this emphasis of matter paragraph in there, but just wanted to point that out. Then if you jump to page 4.
Before you move on, I just want to know what GASB stands for, please.
Government Accounting Standards Board.
Okay, thank you.
You're welcome. And just since you asked, when I started this profession about 25, 26 years ago, I think there was only like GASB 10. And over the last 25 years, we're in GASB 90 now. I mean, they just keep on going. So for a while, it was really quiet. It seems like GASB has nothing better to do to issue all these standards every year. So the accounting profession is never dull. It's always changing. So I wish we could take off another 10 years and not issue any more GASBs because it's quite a lot to keep up with. But starting on page 4 is what we call management's discussion and analysis. And this is really where management takes the opportunity to, in a kind of a narrative format with some graphs, to tell how the district has done throughout the year. So I encourage anybody, if you hadn't had a chance to read through the financial statements, if you can't sleep at night, that might be a good thing to do. You can read these, it'll definitely put you to sleep. But if you do have a few moments, I would probably read pages 4 through 19. That really gives the reader the financial statements some information on the financial statements. It's a narrative format, so it's kind of easier to understand, but you can kind of see where the district's been, where's it going in regards to FTS, in regards to long-term liabilities, regards to what the future looks like at Santa Barbara Community College. So again, great information to read. I'm not going to go through each page because you guys can read that on your own. But basically, starting on page 20, if I'm not mistaken, is basically the first page of the financial statements. And that's called a statement of net position. And so this is where we take all the information provided us to by the management in the 311. So I'm assuming the management probably went to board with that sometime in November with the 311. So we take all the funds of the district, the general fund, your capital project funds, special revenue funds, and we consolidate all that information into this one statement. So when you look on here and you see you have cash and investments of those dollars, and you see you have total assets of $250 million, don't get too excited. That's not the general fund. That's all the funds of the district, right? This set of financial statements, in accordance with how we're supposed to report to the chancellor's office, also includes, for example, your capital assets. You'll see that there at the top portion of this statement of net position. So that's your land, that's all your buildings. As you can see there, the $9.2 million under non-depreciable capital assets, that's the land. I guarantee you, if the district would ever sell the land of the city college, that it'd be a lot worth more than $9.2 million. But land's recorded at historical cost. It's not at fair market value. So it's what the district actually paid for that land. So that's all the land that the district owes. But then also part of these statements, you'll see in the kind of the middle under liabilities, you'll see some big numbers there. You'll see there's the aggregate net other post-employment OPEB liability of about 8.6 million. And there's that big liability underneath it, which is the CalSTRS and CalPERS, the pension liability of approximately $115 million. So as you see, we take the liabilities, the assets, and we put them all into one of this set of financial statements. And it's just to make it so it's comparative to other community colleges and other entities that are out there throughout the state. So we take all that, and at the end of the day, you'll see the total net position is a positive $24.9 million. which is actually is pretty good. There's a lot of community colleges and other entities like school districts that are out there. And when you bring in all the debt that they have of the district, it really flips them upside down, and they'll have a negative total net position. So even though you guys have an unrestricted deficit of $75.2 million, you still have an overall net position positive at 24.9, which in the future that could change because those liabilities for OPEB and pension, those fluctuate depending on actuarial studies that are performed by a third party. So who knows over the next 10 to 15 years what that will look like. I'm assuming that they'll continue to increase, but who knows, right? It all depends on what happens with those actuarial studies. But basically, this is the statement of net position. And as you can see on the next page there, 21 is the statement of revenues, expenses, and changes in net position. So this is all the revenues and all the expenses of the district. Again, this is all funds for the district. So at the end, you'll see there at the bottom, there was a net position at the beginning of the year of $24.5 million. And then at the end, it was 24.9. So there was an increase of about $363,000 for the year.
Bill,
Uh-huh.
could you just briefly explain when we have this positive net position of 24.8 million, what is that primarily attributed to relative to other districts? Is it they have more
They have more debt.
loans,
They
more
have more
debt?
debt, yeah, because you guys are a smaller community college, right? So if you get some of the bigger community colleges that are out there that are multi-campus, their pension liability is way larger than the ones that you guys have, right? And also their OPEB liability. So right now, because you're a smaller district, that's why you have that positive net position at this time. And honestly, these financial statements right here, even though they are required, and this is how you're supposed to report to the chancellor's office as a board and as management for decision-making purposes, to be honest, they really don't mean a whole heck of a lot. What people should be concerned about is the general fund, right? That's the operating fund of the district, the general unrestricted fund. So honestly, that's what probably management utilizes and looks at a lot as they're preparing budgets and they're doing different forecasting. They're looking at the general fund unrestricted operating budget of the district, right? And that's on the 311 that you receive probably on a quarterly basis, on an annual basis. But these financial statements, yes, they're required, but to make operating decisions, they really don't mean a whole heck of a lot because, like I said, it combines all the funds of the district, and really the district's main concern is that general unrestricted fund, which is the operating fund of the district. So I wouldn't get too caught up on the $24.9 million in net position, I guess is what I'm trying to say, is that it really doesn't mean anything because you really need to focus on your unrestricted general fund. That's your operating fund of the district.
But does it mean that 24 million is money we can spend?
Depending, right? It's as a whole, yes. But again, going back to, you would have to look at your general fund unrestricted, right? Because like I said, this includes capital project money. This includes student financial aid money.
Bookstore money, financial aid.
It includes all the funds of the district, right? So it's technically, no, you don't have 24. That's why I said on this statement, yes, but
I got it.
I need to focus on that.
I got it.
Yep,
Thank you.
you're welcome. But good question though. All right, moving on. The next statement is the statement of cash flows on page 22. Again, this just shows the ins and outs of all funds of the district, how the money comes in and how it goes out throughout the year. Again, information that's required, but again, going back to, like I said earlier, it's that general fund, unrestricted fund that you're really focusing on. And then starting on page 24 are the notes to the financial statements. So from here all the way through page 61 is basically notes to the financial statement, which provides the reader with a little bit information about the numbers that we just talked about on the statement of net position. So for example, if you go, probably a good note is on page 36 and 37. So here's the capital asset. And if you remember on note 5, I talked about how you have land and construction in progress You'll see there in that right-hand column, it's $9.2 million. So you can see land consists of about $5.3 million. Again, that's at historical cost, not at fair market value. There's some construction in progress of about 3.9. Then you'll see your land improvements, your buildings and improvements, your furniture and equipment, and it gives you net capital assets of $142.9 million. A note that I really like that I think tells the district a lot of what those long-term liabilities are is starting in note 6. Now, this is your long-term liabilities other than the OPEB and which is other post-employment benefits and the pension liabilities for CalSTRS and CalPERS. But note 6 shows you have GEO bonds outstanding of about $55.3 million. Remember, you do have a revenue source to pay that back. That comes from property taxes from the people that live in the area. There's a small loans payable for about $581,000. We have compensated absences, which is basically vacation pay. So if everybody would retire as of June 30th, the district would have to pay out $2.4 million. And then there's a supplemental employee retirement plan for about $1.3 million, or I'm sorry, $2.6 million on the books. The 1.3 is the load banking that's on there for about $1.3 million. So it just gives the reader a little bit more information about some of those liabilities. If you turn to page, where do I want to go? Turn to page 48. This is another good information that usually people want to know about. Note number 8 is the CalSTRS and CalPERS liability. So this is the pension liability that I talked about. So you can see the pension liability is broken out between STRS and PERS, and you can see there's a total liability of about $115 million that is out there. And so it's broken out there. And as you read through this note, it gives information about this liability. One thing that I do like is they do some interest rate to see how that liability fluctuates. So if you go to page 54, thanks, Ryan. Page 54, you can see how volatile this liability is. And so this is just for the STRS only, and they only take the portion that the district is responsible for. So that $63 million in the middle figure, which is at the current discount rate of 7.1. So the total liability right now is about almost $64 million, right? But you can see if that discount rate decreases by 1%, that liability skyrockets to almost $97 million. And then the discount rate increases by 1%, you can see how that liability dramatically decreases to about $37 million. So as you can see, this liability is very volatile. It all depends on discount rates. And basically what that is that's the rate of return on monies that are out there currently and how the market plays into this. But this is all determined by a third-party actuary. So you can see, depending on what rate they use, how that liability jumps one way or the other. And I just wanted to point that out so you can see if at any one time, if that rate either decreases or increases, that liability significantly jumps up or down. I just wanted to point that out.
So we're not dealing with stable numbers here.
Not with these pensions, no.
Not with these pensions, right?
Not at all.
Yeah, exactly.
I've seen for some of my districts, they can jump $50 million in a year for some of my larger ones.
Right. And like Ryan said, yeah, those are some of our larger districts. And like I said, Santa Barbara Community College is as a smaller community college compared to some of the other ones. But yeah, we have seen some big fluctuations, and hopefully the actuaries are kind of, I would say, more right on than they usually are off. Usually, like I said, we've seen that. We don't like to see that often because we want them to be a little bit closer to of what it should be, right? Because we don't want to see big spikes up and big spikes down. We want to kind of be consistent, right? And one way or the other.
Just to give you some perspective.
I just finally want to say that I take back that instability. This is just a snapshot in time.
As of June 30th, correct.
A little less problematic than unstable. Okay.
Yep. Another report, another page that I wanted to point out that I think is very important is page 70 in the audit report.
Somebody has their hand up.
Oh, I'm sorry, go ahead.
Liz, would you like
Yeah,
that?
I have a question on this liability. I thought that retirees got paid directly from PERS. So what kind of a liability is this? Would the district ever have to pay it?
So good question, and that's the argument that has been going around since this GASB came about. Geez, how long ago was it, Ryan? About 7,
8 years.
8 years ago, when GASB came about and they put this, they made not only community colleges, but they made all governmental agencies record this liability on their books. Yes, I do agree with what your statement is that, is this really a liability of the district? Because what happens is this liability follows the person, whether it's a STRS liability or whether it's a PERS, right? So if you happen to quit Santa Barbara and go work for Cuesta Community College tomorrow, that liability moves with the employee, right? And so the way that districts have been handling this liability for the last 25, 30, 40 years or whatever, what they call is a pay-as-you-go, right? So basically you pay for those benefits as you incur them on an annual basis. What GASB, when they came out with this, and like I said, it's a bunch of accounts that sit up a room up in Sacramento or wherever they are, and they say, well, that liability technically is the liability of the district, and so we want them to record it on their books to really show a true position of what it is. But I do agree with you that and then the argument has been from a lot of governmental agency is that, well, that liability is going to be paid by STRS or PERS, and I guess technically, California and STRS and PERS would have to go belly up, right? And then someone would have to pay for it. So I guess that's why GASB said they're going to put it on the district's books and say it's your liability. So
Also, it's because the district is the one that received the benefit of the service of the employees. So in accounting, we have what's called the matching principle. So since you got the district got the benefit, the district has the liability
that's
on
the
their books.
liability, yeah.
But if I was to retire tomorrow, what would happen to that part of my part of that liability?
So it continues, like you don't get your full payout right on one day, right? It's paid out
No, it's over the rest of your life.
it's over the rest of your life, yeah. So that's all considered and factored at how they determine that liability.
It just seems like it's a scary big number that isn't that real.
Yeah, it's more,
Kind of.
I guess Lindsay could tell you, it's probably what the district manages more probably is more of the real problem is the rate increases.
Yeah, I
contribution
mean,
rate, yeah.
that's a real payout, but this just
Absolutely.
seems to be in the big number that
But
they'll
those-
never
those-
pay out.
Yeah, those coincide to each other though, right? Because that's the reason why STRS and PERS is raising the rates, because they're trying to fund this liability.
But the district just has to pay the increase in the rates, doesn't have to
Correct.
pay this anywhere from 60 million to 100 million.
Right.
Okay,
Good question though. But it's just a standard requirement, and that's been the argument since this GASB came about.
yeah, I
Okay.
was employed when that happened and it just seemed to be a little bit off, but that's the requirement, so I
Yep.
understand.
Yeah,
Cornelia has a question.
yes.
Yes, I would like to kind of like second and emphasize what Liz just said, that this appears to be very much a liability that the college does not actually have to pay. I think, Bill, what you said, the pay as we go thing, this is the annual or the monthly contributions we are making to CalPERS and CalSTRS, right? And
Right.
it's not that.
Right.
This liability, that is the potential claims of me, for example, once I retire against the college.
Mhm.
Right.
And that is why they are discounted to some kind of like present value with
Correct.
discount rate, right? So I just want to make sure that we are very clear on that. This is a liability that is actually like never paid by the college, but it's paid by
Yeah.
CalPERS or CalPERS.
Because you don't make any payments directly to the retirees.
Right.
You make them to
Whereas-
STRS, you make them to PERS, and they handle that part of it.
Exactly.
Yes.
So that's why I mean, I think we are all in agreement that we don't really understand why the colleges are required to
It's-
have that, and I also remember when this first came up, that was a major thing, and yeah. All right, thanks so much.
Yeah. Yeah, this was a very political issue for a long time, even before it was ever implemented, on who shows this for the longest time, I believe, and Bill, correct me if I'm wrong, this was on the state's books as a whole.
Yeah,
And when this GASB 68 came down, it kind of trickled down, but I mean, our thoughts on this are the same as yours. Yeah, the district is never going to pay that $63 million as opposed to your GEO bonds that I think are about the same, roughly the same amount. Those will be coming out of district funds. So there is some difference there.
but going back to, like I said, I think the real things that the district has to budget for is for the STRS and PERS
Absolutely.
rate increases, because those are real, right? And those have jumped up significantly over the last 7-8 years. And the district does have to budget for those increases. And those are some pretty big jumps that have happened over the last 6
Matter of fact, do you want to jump to page 66 to show that?
Sure.
And then we can go back.
No, we're good.
Yeah, so if you look at page 66, this is the schedule of the district's contributions to PERS and STRS for the last 4 years. And if you go to 67, it goes back a couple more years, I think to 2015. Yeah.
Yeah.
So you can see it's gone from 3.3 and 2.5 million to, if you go back to page 66,
Yeah.
all the way up to 6 million and 4.5. So it's almost doubled in that short span of time, relatively short span of time. But
So,
yeah,
yeah.
this is where the concern of the district really needs to be. I mean, you look at that bottom rate there, 20.7%. In 2015, that rate was 11.7. That's a huge burden.
It's almost doubled, right?
And the STRS one, same one, went from 8.88 to 16.15, almost doubled.
Yeah, so definitely you can see that the monies that the district is paying out the door, right, between the 6.1 million, almost the 4.6 million, that's what's being paid to STRS and PERS on an annual basis. So it's not a small dollar, it's a big chunk of change that the district has to budget for. Alrighty, page 70. This is called the SEFA, the Schedule of Expenditures of Federal Awards. As you can see on page 71 at the total there, the total federal financial assistance for the year was almost $36 million. Obviously, the majority of that money is basically in 2 programs. On page 70, you can see at the top is the Student Financial Assistance Cluster, which is your Pell, your direct student loans, your FSEOG, and your federal work study of about $16.4 million. And then you can see last year this started, and again this year you can see the COVID-19, the higher education emergency relief funds with the student aid portion, the institutional portion, and the minority serving institution portion. Those $3 added up to about $15.8 million. So that's the majority of the federal dollars they received is between those 2 programs. But this schedule just gives you an idea of the federal dollars that were received and expended throughout the year. And obviously, every time you receive federal monies from the government, there's always compliance requirements with that information. And we'll discuss that a little bit further, but I just want to let everybody see this page here. Moving on to page 72 is all the state expenditure for state awards. So this is all the money that usually comes through the chancellor's office, and it flows from page 72 to page 73. It's approximately $37.5 million that was received. But again, it just shows you details there of those revenues and expenditures. And again, always with state awards too, whenever you receive state money, there's always compliance requirements with those too. And we'll talk about that a little bit later. And then moving along to page 74 is your FTS for the year, for your FTS for the year that comes that's reported on the annual 320. And so this is just information that's in the audit report. This agrees back to the annual 320 that was filed with the chancellor's office, but you'll see that there. And then there's some other compliance schedules that are there. I think I'm going to jump to now, which is my favorite part of the audit report, because it kind of gives a snapshot of the district, and that's on page 92.
Somebody's requesting the font be made more larger.
There we go with that size right there. All right, so this is referred to the summary of auditors results, and this actually is just a snapshot that tells how the district did and what we reported as auditors. So all the information that you've seen is basically information that's provided by the district office, right? We take the 311, we look at those numbers, we vouch all those numbers to supporting documentation. For example, cash to bank reconciliations, to investments, to investment statements, to receivables, to receivable detail, payables to payable detail. We vouch all those records, right? And we conduct our audit. And then, like I mentioned earlier, when I first started the discussion, is we give 3 opinions, right? And you'll see at the top, financial statements, federal awards, and then we give one over state compliance. And so over financial statements, like I mentioned earlier, you received an unmodified opinion with no material weaknesses, and there was none significant deficiencies reported, and there was no non-compliance. So again, unmodified opinion, highest level assurance that we can give over the financial statements. Why is that important? Honestly, this is the first opinion that when the accreditation team comes out, they want to see what the opinion was over the financial statement. So as you go out for bond rating agencies, they look at the financial statement opinion. They want to know what type of report did you receive on your financial statement. So highest level assurance that we could give, very important. Then the next area that we look at is federal awards, and I just showed you the CFA. This year we looked at, you'll see in the middle of the page, we looked at the student financial aid, which was about, like I said, $15 million, and then all the COVID monies, which between those 2 programs was over $30 million that we looked at. So we audited basically, I didn't calculate the percentage, but it probably has to be over 90% of your federal expenditures. We were able to issue an unmodified opinion over the federal awards. There was no material weaknesses, but we did have some significant deficiencies. And those were some findings that we have reported in the back of the audit report that are disclosed there. There was 3 of them over student financial aid, so the student financial assistance cluster, and there was 1 in regards to reporting for the HERF funding. So in total, there was 4 findings over federal awards. Even though we had those findings, they weren't of a material sort that we had to change our opinion. So like I said, we are still issue an unmodified opinion, which is the highest level assurance. And so that's good news. You'll see those findings in the back of the report. You'll see management has put some responses and how they're going to correct the actions on those findings so that those will not occur in the future. And then the last opinion that we give is over state compliance. The Chancellor's Office comes out every year and they come out and give us a list of items that they want us to look at every year, and we're required to audit those areas and to make sure that the district is in compliance with those areas.
I'll see those areas, they're on page 90. Sorry, Bill.
Oh, that's okay. Yeah, and if you want to flip to page 90 real quick, just so we can see what those areas are, you'll see right there at the top of page 90, you'll see it's the SCFF data management control environment, the supplemental allocation metrics, salaries of classroom, instructors, the 50% law, and then it goes on, students actively enrolled, dual enrollment, scheduled maintenance, and it goes on and on. As you can see, we have to look at all those sections. And so we did have a finding this year over section 412 SCFF supplementation allocation metrics. You'll see the finding there in the back of the audit report. This one's a little bit different. So if you flip back to page 92, you'll notice for this one, we had to qualify our opinion. And the reason for that is when it comes to, for the Chancellor's Office in regards to state compliance, whenever we have a finding, they make us qualify the opinion. So we basically qualify the opinion except for all the other programs that we were able to issue an unmodified opinion for. So there's a qualification for the finding that we have for section 412, but then all the other programs that we just read over there on the other page, we were able to issue an unmodified opinion for those programs. And so that's basically my report for tonight. I'd be happy to answer anybody's questions that they might have.
Okay, thank you, Bill. I really appreciate your running down. I have a number of questions and I think others may. I was not quite sure how this format was going to work, but I do see that at least on my screen, If someone raises their hand, their picture and the raised hand will move over, and I think I can see it. So I can actually call on people, whoever raises their hand. Maybe I could ask a couple of the questions that I have, for starters, and we could go on with that. You just mentioned the qualified opinion relative to the supplemental allocation.
Uh-huh.
And as I read that, you did a sampling and then you extrapolated from the sampling, and we were over-reporting, I believe, by 3.8% on our supplemental allocation, which basically reflects our poorest students, the ones with the Pell Grants and the BOG waivers, or I guess they're called the Promise Program now. And my first level question is, on page 4, we refer to our supplemental allocation as 14.6%. And that number is already jumps out at me because it really should be 20%. That's the way the SIF funding is set up. And what it tells me is that the college has a relatively low proportion of the most economically challenged students. And that's why we have a lower number of 14.6 rather than 20%. And someone can correct me if I'm wrong on that, but I think that's what that means. Now, does that number reflect the over-reporting of 3.8%, or what would we, should we subtract even more?
So on the MD, you're referring to in the MD&A, right, on page 4?
I'm referring to your statement about what the percents of the different funding is for us. Let's see if I can find it on page 4.
Yeah, that's
Yeah.
on the MD&A.
Yeah, so that's on the MD&A. So you'd have to ask management if they took out the finding in there, or does that include that?
Supplemental allocation right at the bottom of page 4, 14.6% based on the count of Pell Grant and Promise recipients and AB 540. So I was thinking you guys would know that one, but Lindsay, do you?
Rudy has his hand up.
Yeah,
Rudy-
Rudy has his hand
Rudy,
up.
I see you. Rudy, please.
Hi, so on this one here, you're right to say that the formula reads 70, 20, and 10. And we state that. We also state that below are the actual calculations, because this reflects, if you were to go to Exhibit A, the chancellor's office, and you run the percentage calculations, this is what it comes out to, if you were to pull it up. So you wanted to show that. So we didn't modify anything. We're just trying to present, this is what the numbers are, so that if someone, a reader, right, were to go back like we did, we went back to Exhibit A and said, what were our percentages? How did they turn out? This is what we reflected there. We put a little note there. But we didn't like back out that number. That would be a little bit difficult to do, because they're in that part of the formula, there's different rates, if I'm not mistaken. So it'd be a little bit hard to pull it out, but we didn't. I can confirm that.
So as a result of this finding, are we expected to adjust our numbers or not?
Well, so we've already reached out to the chancellor's office to understand what they want to do with this. And we have a follow-up call with them. I think we got some little guidance that, we have an opportunity to make corrections, but before we do anything, we'll follow their guidance. But just from our conversation, it didn't sound as if it's something grave. That they're going to take money back. My understanding was it's like Bill was saying, this is an opportunity every year for the chancellor to fine tune what they look at and how they assess funding to get them data. But that's the most that I know so far from the chancellor's office, is that they want us to look further into it, but we have a follow-up call to figure out what that means for us financially.
Okay. Well,
If anything.
Yeah.
If anything.
Yeah, I mean, they wanted the information, now they have to figure out what to do with it.
Absolutely.
Okay, another thing that jumped out at me, and this is in the same section, is that the college drop in FTES, particularly in 2021, that's shown on the graph there, which I don't know if anybody's making more changes, but it would be really great to have the actual FTES numbers there because the graph kind of makes it hard to figure out other than a big picture. But you comment that we dropped down in 2021 to 10,721. And to me, that's significant because at 10,000 or below 10,000, we become a small college and not a medium-sized college. And that has a real impact on what funding we get from the state. So I'm hopeful that we will be at or higher than this in the coming year. And that we will not continue to drop below that level. Page 16. Just as you're cleaning it up, there's a reference to the board of directors, and it should be trustees.
You are correct.
Let me-
On page 33, you're talking about the cash in banks. And that reminded me of a discussion we had in our full board meeting about the idea of putting out a request for proposal to banks about the money that we have, which is substantial, sitting in banks. And what kind of interest they might pay us, especially since it kind of looks like interest rates are going to start to rise, that will make a difference to us. And I also noted that on page 34, that you said that we have custodial risk for bank failure. And so I am curious about what we might do to address that issue more directly. It sounds like there are securities, but they're not in our name, so there is a custodial risk here. Could you perhaps elaborate on that?
Is what that is right now, that's the balance that are in accounts that are not deposited with the county treasury. That's in excess of FDIC coverages. So if those banks, which I believe, I can't remember how many different banks there are.
Union Bank. I think it's Union
I think
Bank.
so. I think it is too.
And-
If Union Bank was to go belly up at June 30th, that's how much is potentially at risk that could be tied up for, months, years, that the district just would not have access to.
And that's 30 what is that?
29.1 million. So
29.
you do have the FDIC coverage of, 500,000, which I know is nothing compared to 29.1 million. So that's what that's bringing attention to. So the one thing I would take away from that is definitely getting those funds out of those financial institutions into the county treasury.
So you would recommend a different proportion of how we distribute that money?
Yes, that number is the highest I have for any district by far. And that's regardless of size.
What amount are other districts keeping in banks?
Probably, I would say I'd normally see about 10 to 15% of that number. Because the county treasury, that's where you're earning more interest than you are in these banks. That's where you're drawing your warrants from. That's really your operating account. That's where your money should be. This money, it's all mostly, like I said, it's in clearing accounts. It's waiting to be deposited to the county treasury. Just hasn't made it there yet. At June 30th.
At June 30th. So yeah, so it's most likely, and I mean, I could let Rudy has his hand.
Yeah, Rudy has his hand
It's
up.
probably a timing difference if I would think of it. It's probably just a timing difference between June 30th and whenever it got deposited from the clearing account to the county, but I'll let Rudy speak on that.
Okay, Rudy?
Yes, Trustee Croninger, what I wanted to add to the conversation is, so we recently spoke to a banker, actually one specifically was the head for our account at Union Bank. And he mentioned to us that really state law protects these funds. Now that could be, there is the FDIC limit, get that, but he says that there's something special in our state law that protects our particular funds. But to the point that's being made, thank you, Ryan and Bill, we need to come up with something better. We are in the process now of working this issue with an investment policy, but that's just, I just want to quickly address that.
Yeah.
I think we're good, but maybe Bill Ryan has more information. That's my understanding.
Yeah,
that
Your
the
and
state
your
law
understanding is
protects
correct.
us.
Yeah, because it is in the name of governmental entity, you do have additional protection. There still would be more delay getting access to those funds as opposed to what you have under FDIC. And who knows how long that could be. But Rudy is absolutely correct what he was told by the banker, that you do have special protections as a governmental entity.
Yeah,
So it's
you
not
were-
like as if Union Bank went belly up at June 30th, you're absolutely going to lose 29.1 million. You do have priority over whatever happens in that liquidation sell-off process.
Right, but priority isn't the same thing as getting all your money back.
Exactly.
Yeah.
Yes. And again, yeah, would it be tied up for a week, a month, 2 months? I mean, who knows?
But put it this way, they're ahead of me and you, because
Yes,
we're behind
absolutely.
them. We're behind all government agencies,
We
so.
wish to be ahead of everybody. Thank you. Okay.
Right.
Anna?
So how does our money get to the bank that then we have to take out of the bank and put in the,
Rudy,
Wire transfers from some-
in
Rudy, do you want to comment on
in
that?
the state coffers? How does all that money get in the bank in the first place instead of in the state coffers where it should be? Or where most likely, where most of the other community colleges have theirs?
Yeah, so a lot of what goes on is, that, we basically manage two pools. We manage the Union Bank pool to pay bills out of. We also manage the county pool. So a lot of financial aid comes into the Union Bank. So it's really formalizing the process to really maximize, right, the return on that. Anytime you take a snapshot of this, it's like pencils down. Come June 30th, if we were in the process of moving funds, I mean, it's pencils down, can't do any more. But that's really how the flow of funds goes between those two pots. So if we have a bunch of financial aid comes in, we make payments out of there, and at some point we have to move it back into the county. Or if we need funds, we pull them out of the county. But that's why we're really revamping the process whereby we maintain the balance that best gives us the most for our money. And that's really what discussion with Bill and Ryan has really brought to us. It's like we need to formalize that process so that especially at the end of the year, we're not like, we don't have this money out there. Not so much from an appearance perspective, but from an actual policy perspective, that we maintain a certain balance. I don't know if that exactly answers the question, but those are the two pools. Maybe Cesar, do you have?
Well, I just had one other thing, as Trustee Croninger said. I mean, it's one thing to have the FDIC assurances that's somewhere codified, but to have some banker say, "Oh, don't worry," that's not sitting well with me. But I would like to know, because obviously I get the fact that you need to have some means of cutting checks and paying bills in a timely fashion. But I'm just a little concerned that other campuses or other colleges only have 10 or 15% of this large sum that we have in the bank. So that's why I'm wondering, how did that money even get there in the first place? But at any rate, I'm listening.
Yeah, I think we appreciate that you're looking at it, and would appreciate hearing more after you've looked at it as to what you might be proposing. Because I see two issues. One, the amount of money that's kind of seems to be sitting there whenever we see it, and that could be an artifact of the snapshot. And the amount of interest which we are not getting on this money. So those two issues seem like something we would appreciate hearing more about down the road when have talked it through. So, okay. Let's see. I think those were my main questions. Do other people have questions? Anna, I know you've had a couple. Jonathan, anything? Or others among our attendees?
I don't have any questions. I'm doing an audit for IVCSD right now. So thank you to all our staff for dealing who dealt with this and got through it as auditors. I know it's a lot of work, so.
Okay, well, Ryan and Bill, thanks very much for your presentation.
You're welcome. And I just want to echo the words that were just said. An audit does take a lot of work by everybody throughout the district, not only the business office, but admissions and records, financial aid, and the attendance people, and everybody that participates throughout the whole audit process. So it takes a lot of people to get through this. So we do want to thank the district and for everybody's cooperation in getting this audit completed. And so just like to thank everybody, and obviously thank the business office with Rudy and Cesar, and also with Lindsay there being over the head of that whole area, is just helping us get through this whole point. So that we're here today, right, to obviously present this audit report to you. So thank you for everybody and helping us get here.
That would be great. We really appreciate that you've done a lot of work and that our folks as well in working with you. So thanks to everyone.
Thank you.
Thank you.
Anna, did you have a?
Actually, I was doing an applause, but I did have a question. Am I correct? I saw something that said that we'll have another set of numbers by the 15th. I saw something that said that this report wasn't done, wasn't final for going.
This is a draft, isn't it?
Right. So is it right the 15th, or was there some other date? I thought I saw the 15th. That's all.
It's on your board agenda. The 16th, I think, is when the final will be there.
Okay, thank you.
We also didn't touch on the parking report, which when I looked earlier, I didn't even see it. Has it just appeared, or is that?
Yes.
So I will tell you that the parking fee report is a lot smaller report, and I will say that we were able to issue an unmodified opinion on the parking fee report. So really nothing to report there that was out of the ordinary, or nothing that was different from any of the years in the past. So
okay.
It is in the agenda item and on the board doc.
Yeah, I just didn't see it earlier when I was looking at those documents. So I guess it's a newbie. But we'll see it again for the full board.
Mhm.
Okay, shall we go back to the full-time faculty hiring, item 2.2?
Yes. Sorry, I was late. I was having computer problems. And so we have in front of you tonight the item regarding our full-time faculty. In researching this, I was told that we usually don't bring this to the board for acceptance or like to go through this. It's kind of in the president's report. So I wasn't here in the past. And I asked HR to make sure it's on your overall board agenda. And then Trustee Croninger asked to discuss the financing for our full-time faculty in this meeting tonight, so that we can explain where the money comes from for these hires. So with that, I guess I'm turning it over to Lindsay, or are you turning it over to Rudy to talk about the funding?
Oh, I could take that one. So as Dr. Murillo has explained, you can see here in the transmittal language for this item that we have 10 full-time faculty positions. And the first 4 are positions that are either 80% or 100% grant funded. So the first 2 are DSPS positions, 80% grant funded from the DSPS grant from those funds, and then 20% from our unrestricted general fund. And then the next 2 are associate degree nursing faculty positions, and those are both funded by a restricted fund we have set aside that typically does fund these types of positions. And the revenues, or the funds that we receive to pay for things in that fund, are primarily from our Cottage Hospital grant. So those are those next 2. Now, after that, we have items 5 through 10, all of those would be funded by our unrestricted general fund. We weren't able to put specific dollars to this item because it's a bit difficult to estimate where we're going to bring in a full-time faculty member at in terms of what the salary will be. But you know, you can estimate $100,000 per position as a very rough number. Okay.
Would that,
And
Lindsay, does that include benefits?
yeah, if it's on the low end, you know, if the faculty position's on the low end, if it's on the higher end, it would be more than that. Yeah.
So
Kind of.
the-
You can pretty much estimate between 100 and 120,000, depending on where they come in at on full-time faculty.
Yep. And then
So
just,
that's entry level, basically.
yeah,
Yeah, that's a whole other discussion.
Well, do we only look for entry level, basically, or are we accepting of someone with more experience, perhaps transferring from another college?
It looks like Cornelia has her hand up, but I would ask, I don't think Michael's here to say how we place it, but maybe Cornelia can answer that.
Okay, Cornelia, your turn.
Okay, response to your last question, Marcia, I think we are hiring the best qualified candidates. And just as an example, the accounting department in recent years had 2 new hires, and one was actually coming from Ventura, who had been experienced faculty member, full-time faculty member, department chair in Ventura, whereas the other faculty member came from being a mainly part-time faculty. So we hire, I think, both levels, right? Only very few faculty, however, start with the very first step, right? They usually have at least part-time experience, which is counted towards their step placement. So very few, I would say very few hires come directly from college or from the university. So I hope that helps. The item I would like to address is the cost and the funding of the faculty here, because I would like to bring in an aspect that I think we have not talked about. So I looked at these 10 new faculty positions, and I'm very happy that we are hiring them. And for sure, we are all very happy that there is $1 million in unrestricted general funds coming from the Chancellor's office, from the state. For one, I would like to point out that I believe there's a little typo in line 2, because we are talking, as far as I know, about the fall 2022 new hires, not the fall 2021. So, and this said, I did a rough estimate, really rough estimate of the cost of the unrestricted full-time faculty hires for this fall 2021 beginning school year. And I adjusted the amount of 100 to 120,000 that Dr. Murillo and Lindsay just mentioned by the amount that we should deduct from this cost, which we would have spent for part-time faculty teaching the identical load if we had decided not to hire a full-time faculty. This cost for, so usually, and again, that's my rough estimate, and for sure this has again to do with where the full-time faculty is hired on the pay scale. That is about 65, the full-time faculty costs us about $60,000 to $65,000 more than the part-time faculty for teaching twice 15 TLUs, fall and spring semesters. If you add that together for the 6 full-time faculty, so a net cost of 6 times $65,000, and then the 20% for the 2 DSPS counseling positions, 20% of $65,000 in cost, and then you offset the one unrestricted general fund retiree, which is, I think, in addictive and drug counseling, also effective at the next fall semester. The cost of these full-time faculty hires are $350,000. So this is the cost. This is the additional cost that we are incurring compared to we would not hire any full-time faculty. And we are receiving $1 million for that. So I just want to make sure that we are very clear that we are basically having a surplus of $650,000 ongoing. You could also argue you could hire more full-time faculty.
I certainly would have some thoughts on that, but Ruth? You have your hand up?
Yeah, I'm on BRAC, and it's my understanding that the current budget 2021-22, that's correct, the one we're going into, that we actually have 4 unfilled faculty lines there, right? Lindsay and Rudy, we had this conversation at BRAC. So we have some space there.
Yes, that's right.
Yeah, so I wanted to point that out. So that's because of people, you know, retired and, you know, and those spaces were still accounted for in the budget. It was unexpected. And then a question I have is, even though it says here that this is going to be ongoing, do we have an idea how long this $1 million is going to be coming in as a flow into our general fund?
The
Dr.
Chancellor's Office, I'm okay to answer that one. When the Chancellor's Office issued the letter, they said it was ongoing. And I just remind us all that ongoing in the California state budget is always subject to whatever happens in California. So we can say, I can always say, oh, it's ongoing. And when you say that that's the cost for ongoing, you also have to take into effect that once a faculty member's been here, they go up on the salary schedule, the cost of STIRS and it's like all of us, our costs increase as we move, as we stay in the organization. So I think we have to think those things through. And I'm really comfortable with making a recommendation to the board of 10 hires. And after I've been here a year and understand more about, tonight's been really fun and enlightening about our budgets, we might be more comfortable adding some additional ones. But at this moment, I think hiring 10 full-time faculty members, not knowing what the governor's budget is going to be and what's happening in the state is a good step forward. And I'm a big supporter of always having full-time faculty. So I wanted to hire at least 10, and I think that's a comfortable place to be right now.
Okay, Cornelia, are you still holding? Do you have another?
No,
comment?
that is a new hand because I
That's a new hand. I'm sorry, I wasn't.
Yeah, and also I would like to appreciate what Dr. Murillo just said, that she is a big supporter of hiring full faculty. I think this is a very important sentence, and I would like to emphasize that, so to make sure that it's heard and maybe reflected in the minutes. I actually would like to add that there is another piece of good news to this funding, and the good news is that because of the way we are hiring, right, we have the Senate ranking in the fall, and then we are going out for the new position in January. I think we just placed the job announcements. They are the applications become due at the end of January, and then there's the hiring process, and the hiring is only in August 2022. However, we already got the first 1 million in additional funding, or are getting it in the current year. So this is really nice. So I thought you all like good news.
Jonathan.
Yeah, I support what was said as well on hiring full-time and faculty. And I was just asking, so we're doing this 10, what's our, I know that the hiring process is not easy either, but if we wanted to change that, what's our ability to, or timeline to do that, to is there a deadline or a time when we wouldn't be able to do that anymore?
So when you go out with faculty, what you want to do is be like the first one out there. So we want to be out there right away. That's why we have it on your agenda for December. We've already rolled the announcements out because we want to make sure that we're recruiting the best. I think that's really important. And one of the things that we find is if we go later than January and our hiring process lags, then by the time we get to March, candidates are gone. And right now we are already experiencing employment problems in California and the nation. So we wanted to roll. So I'm recommending that we go in December and with what number we're going to go with.
Sounds good.
Anna, did you have any thoughts?
Yeah, I just had two comments. I wanted to just respond to the idea that we are getting entry level nursing faculty. What I was thinking about, I'm doing a couple of academic institutional reviews right now. And one of the things that they're looking at is the kind of staggered level of hires. And one of the things that is important is that, if you have like, junior, mid-level and senior, you want to have a balance in the department. And I'm not sure if that's the same with the community college nursing department that has this cottage professional kind of a dimension to it. The other point I wanted to make was referring to Jonathan's question about the hiring. There tends to be a hiring cycle. And as President Murillo said, Superintendent President Murillo said, you want to get at the beginning of the cycle to get the best applicants who don't get swooped up by other institutions. So it's really beneficial and it's good to get there first.
I just want to compliment everybody. When we said we were going to hire 10 faculty and we were bringing this to the board, they got out in front of us so darn fast because we want to be out there first with these announcements, and they got so happy and jazzed about this whole hiring process that everybody just pushed this thing through. I mean, it's one of those times you are so excited because everybody got on it. They got these worked on. It was really great teamwork, and I just can't speak highly enough about everyone who's worked on this to get it moving. It just went like that. I told Marsha I feel bad. It's like coming to the board after the fact because everybody just moved.
Yeah. Well, Jonathan, did you have further comments? Your hand was up. I certainly support hiring full-time faculty too. I think we all do on the board. I just don't want to see us kind of ping pong back and forth. And yet we have not, we've hired a whole bunch of faculty, and then sometimes we do SERPs because we're finding we have too many and we're trying to figure out what to do about it. And so the mix that Anna was talking about is important, because when we have these SERPs, we lose institutional knowledge and institutional memory and experience, and that hurts as well. So there's still a lot of uncertainties, I guess, is what I'm saying. The uncertainty of the future budgets into the future ongoing is only as good as the budget looks. And COVID still seems to be trying to keep us very much in attention. We are running our classes in person at a lower level than we would if we didn't have COVID. All of those things sort of play into this. And so I am comfortable if Dr. Murillo is with what she is recommending, but I want us to be as stable as we can in moving forward. So
I just had one last comment.
Sure.
It's regarding our situation and the hires. I know with nursing it's not as gendered as it used to be, but with the so-called great resignations and women being really adversely affected by COVID, I'm really glad to see these hires that can potentially bring more women back into the workforce.
Thank you. And you do know that hiring nursing faculty and directors is one of the hardest things to do. It is not easy. to get good people that are willing to take a loss of pay to teach.
That's right.
Okay, any further questions from audience or anybody? We've done the draft audit. We have the monthly budget update, 2.4. Is that Lindsay or Rudy?
We're gonna let Rudy take it away. Except you're on mute, Rudy. There you go.
Yeah, it's gonna share my screen real quick. Want to make sure I didn't share the financial statements. I'm just, going through that at all hours of the night. So I know no one believes that. So anyway, so this is the monthly report. We look at this, every month. I just wanted to highlight a few things just to make sure that we're hitting the things and we are sharing the things we want to share here. So on this first page, this is something that didn't get uploaded in case you don't see that in your download. So this is the first page where we show the UGF minus the piece for COVID mitigation. Really, when I look at this, the first thing I'm looking at is how much changed in between the adopted budget and the adjusted budget. Look down here at the bottom. There's a delta in that's about roughly 600. We're saying a balance at the end of 620,000. That really changed only about 40,000 from last month. So not too much of a change. The other thing I look at here is also that we're about 4 months in, so we're about one third spent on the expenditure side, and pretty balanced down the revenue side. So look at that. Looks that we're on track to spend as we plan for the year. The other thing too is the $4.1 million that was brought up last time. That's still in negotiation. So I wanted to point that out. And that's it for the first page. I don't know if there are any questions. Okay, now I'll go to the next one. So this next one is just a carve out for the UGF relative to COVID mitigation. These are dollars that we set aside to spend for a lot of HERF-related projects. Dollars we brought into the UGF. Nothing's changed here, so I don't really have any updates to share other than we continue to plug away at the spending. Okay. On the third page here, this is where we capture our assumptions and any changes to the assumptions. I want to highlight a few things. Most things in this column, current status, has not changed. But we did note a couple of things when it comes to the expenditure side, the salary increases and permanent staff salaries, et cetera. We continue to update based on higher needs and recent vacancies. So that's been discussed here, a little bit about what we're doing with those positions. Also want to note that, again, negotiations are still ongoing regarding COLA. And I'd say the fact there's no change is reflective of we don't see big fluctuations between the adopted and the adjusted budget. So on to the next page here. Okay, so let me zoom out a little bit here so we can capture the whole screen. Is that still okay for everyone? Maybe it's too small there. Okay.
That's better.
So here's where, again, we look at where we thought we were going to be with the adopted budget, where we are today, well, at least as of the end of November. This 618 is only slightly higher than what we had last month. I think we were like at about 40,000 less. So not too much going on in relative to fluctuation. The areas down below, it gives you a sense of oh, sorry about that. I think that I got background noise there.
We lost you.
Yeah, apologize. Can you guys hear me okay?
Yeah.
Yeah, I don't want to nerd out. That was actually a Cisco webinar that you were hearing. So that's how I spend my nights. Just want to let everyone know that. Okay, so we see here 170, well, about 175,000 of fluctuation between the adopted and the adjusted. Down below here is what, what we're noting, what caused that. So we've got about as we go through the process of looking at our positions, right, we're making adjustments to the budget. Some of them impact academic salaries, some of them impact classified salaries. So I can tell you that the first one here related to a position in business administration in that department. And the other category that impacted positions in PE, IT, and school of extended learning. And here's a result of the benefits. Down below is just reclassing between categories. Not too much going on. The big piece was the housing allowance. So that gives us an overall flux of about 175,000. So again, from my perspective, we're not seeing dramatic changes between the adopted and the adjusted budget. On the next one, COVID mitigation, I don't really have many updates here. This is going according to plan in terms of the spending. But in terms of what we saw last time, we're talking about $100 vaccination card incentive. That was different from the adopted budget, the hotspot, the cost of the hotspot services, and the cost of the check-in tables and monitors. That was something we mentioned last time. Okay. So definitely a little smaller here. I don't have much in ways of new updates, concerns with regards to the spending here for HERF 2. This number here in the budget, we'll adjust if we get current, dollars coming in, but haven't really seen anything majorly causing a swing here or concern in terms of what we're trying to accomplish with these dollars. And then HERF 3, this is what we're anticipating to do with the funds this year. This is again similar to last time, a summary of the lost revenue. Where we're going to be looking, I'd say in a few months, is how these numbers in the projection may change. And so when that happens, obviously we'll highlight that and explain further if any of these projections change. So to date, we don't have a reason to change these. And the last page, for those that are interested, we just put some abbreviations and acronyms that we use. I don't know if there are any questions from the trustees, the community as well.
Ruth has a question.
Yeah, for the
yes,
hi, Rudy, for the hotspot fee, is that monthly? So it's $70,000 per month. Is that it?
Oh, let me go back there.
'Cause it's only 5 months, right? It's July through November.
We actually budgeted out through the end of June. That's where I asked Dean to kind of give me that dollar. Did you see something different?
So the 350 covers for the full year?
So yes, it covers now. That way, the way it's presented here is it may, well, here we go. Hotspot monthly fee, 350. Now that includes some other fees as well. I mean, but that's generally speaking what we got from Dean. We'll, if you have any, is there something you saw there? It was a little bit strange.
So my question is it 350 through November 30th, or is it 350 through the academic year? Because that's what we signed.
Through the academic year. Yeah, I told.
Okay, that's a big difference.
Just
okay,
give me that. Yeah, fabulous. Give me. I see your point.
Because
yes,
otherwise it's near $1
absolutely.
million. All right.
I know. Yeah, we. I just had it budget out to the end of June of next year. So yeah, the academic year. Oh, sorry. Let me make it a little bigger here. Sorry.
I have a couple questions, Rudy.
Okay.
One is, I'm not sure, maybe the first page would be the place, but the bottom line on where we are expected to come out on our reserves and our amount over policy reserves. I don't think it's there, but
Oh, yeah. Let me go.
that amount. The other one was HERF. Oh,
Yeah.
there it is. There it is. Okay, so we're still roughly the same on our projected June 22. And the difference between what I guess the number that I'm interested in is the difference between the policy reserve and the 30 million that we are projecting.
Okay, so with that, we'd add the 30 million here plus the other amount on this page. Oh, sorry. Oh, okay, good. There we go. Yeah,
Isn't that
which is
code?
not that much. We'll go back here. So, do you like to see maybe something that reconciles it back to that or displays that to the policy amount?
Yeah, maybe we could add it to the chart, not this, this is COVID mitigation, right?
Yeah, sorry, let me go back here.
Go back to the one you were looking at, add that into the UGF reserve balance so that
Okay.
I mean, what I'm focusing on, and I think several of us have been interested in, is the money that we are over policy reserves
Mhm.
that we might start talking about priorities for investing that money in a way that, you know, is not a small project based, but really a big project based or a big priority based approach. And we haven't started a conversation on that, but I think we should at some point soon consider what might happen. The other thing that I think relates to that is we've obviously been using a lot of her funds. How have we started to think about what might still be an expense next budget go round when we're not probably getting more her funds? So will we still be having COVID expenses, or is it too soon to even think about that? I don't know.
We are having that conversation, definitely, and we'll bring you back an update when we have those numbers. But we're starting that process to capture the information. That's a great point that you're bringing up. I mean, with the HER funds, it doesn't really reflect reality. There's a couple other things too, right? That doesn't necessarily reflect reality in terms of just the funding formula, how, you know, that goes up a certain amount of years. So that is something we'll come back to you, present in a more digestible fashion, so that hopefully we can have the conversation.
Okay, I think that would be really helpful because those are moving parts that are pretty important.
And because we have several priorities that we want to start funding and addressing, we want to have some guidelines within which to make some of these decisions, you know, like particularly around our underrepresented minorities and Black students and supporting them through the program. And, you know, so we need some guidelines on the numbers. That'd be really helpful sooner rather than later.
Yeah.
Okay.
Yeah.
Any other questions? Okay, the CCFS 311Q, item 2.5. Who's got that?
I can, yeah, I've got that. I'm wondering if Luke, if you could share that one.
Yep, I'll bring that up right now.
Okay, thank you. So on the 311Q, you know, for those who might not be familiar with that report, the intention there is to really tell the Chancellor's Office, like, what have we spent so far and what are we projecting? Now, this particular report doesn't really show what we spent for the quarter. Instead, what we do, we tell the Chancellor's Office, okay, and they know this, they know what we spent for the previous 3 fiscal years. But we then come back and say, hey, this is what we're projecting for 21, 22. And that helps them for their planning. So one thing I want to note is if you look at the unrestricted revenue that we're projecting for 21-22, where it says alpha 0.3, we're saying about 106 million as of when we did this report. And if you look down below what we think we're going to spend, which is Bravo 0.3, it's almost 110 million. And we're looking again on the projected amount. That's roughly what we just showed in the monthly report. So when I look at this, I look at this and say, well, we're telling the chancellor's office that we're keeping on track with what we projected. Now, obviously, they're going to be looking to see any major fluctuations. So if you kind of go down this report here, let's see, we'll stop right there. One thing I want to know as we go down is if you look at the annualized attendance FTEs, if you look at the report, it may stick out that we don't have any numbers for 2021 and it's NA for 21-22. Just want to note that that's something that's a little bit out of control. When we fill this report, some of these fields are filled out by the chancellor's office like automatically, so they're grayed out to us. So maybe in the next iteration of this, they'll start to provide that. Just wanted to make note of that for the reader. So if you continue to go down here, there's just more information about our projections. But I think the most important thing I want to highlight is answering these questions down below. And this is the part where we really inform the chancellor's office. If we have any concerns, and we don't, we're on track to spend our budget as planned. And so I'll just stop there and see if there are any questions.
Well, I have a question. Maybe you could tell us more about the 3.7 million red number where it looks like we're spending 3.7 million more than we are taking in revenue. Is that a concern?
Oh, can we go up there, Luke, to the top of the header? Annual current budget. No, on that one, this is the part of the Q3 where we're talking about timing. I don't particularly have a concern about that. Again, this is snapshot in time. I know there's okay. I don't particularly have a concern on that one, but I'm not sure that gives comfort though.
Well, are you saying that if we took a snapshot 2 weeks from now or a month from now, that number would be quite different?
Well, we're looking at this, right? We're saying here's the expenditures, and that's as we record dollars, and if you look at this is the budget. One of those things that's still hanging out there is like what we're going to do with that 4.1, how that's going to shake out. But yeah, as we get dollars in with the revenue, in how we record, the time of recording, that will change. But maybe I'm missing something here.
I mean, is this a number that we don't expect to survive all the way through to the end of the year and say, oops, we're 3.7 million short?
No, that's why, I kind of reference back to the monthly report. That right there is something that we monitor on a more rigorous basis every month that we're looking at. That one we're still saying we're on track with. We're on track to spend the budget as planned, which it won't vary too much to the 769,000 that you see in under adopted budget column 1.
Okay. Bruce?
Now, I will say we'll go back and make sure, the nice part about the chancellor's office is if we look at these numbers and we find something, and I'm looking at this here, if we have an entry that maybe wasn't entered correctly, we can always go back and update that. But again, I go back to sort of the goal of the chancellor's office is for us to report numbers to them and bring up concerns that helps them plan out their funding.
Okay.
Um,
But this, thank you. This isn't really a snapshot as of now, right? This is annualized, right? So it's our projection for the academic year. So we are walking into this with a projected deficit. Maybe we don't want to say that word, but this is what is here. And I think what maybe perhaps what you're trying to say is that a lot of this is uncertain. And so it definitely is. We don't even know what FTEs is. We don't know what our costs are going to be. But I just want to be crystal clear that this is indicative of a structural deficit.
I would say, let me step back. So one thing that we'll provide next time when we present this is a reconciliation back to our numbers. So we have to conform to the Chancellor's Office format. That doesn't always tell the story about what's going on. Like, there's several pieces here that are missing, especially when we look at the revenue side, right? I'm looking at that. That's down. That right there, we project 109. We know that we have about 110 million that we budgeted there. So that right there would eat up that 3.7. So just looking at that real quick, that might have been something that we either keyed in wrong, or we're just conforming to their particular format. But if you look up above, for example, if you scroll to the top there, if we go back to, yeah, right. If you start right there, thank you. On the revenue, let me pull up. What is that?
If I think I want to say something, because I've did these reports for years, and these are not always reflected at the time and space at the particular time with the revenues. But this does not reflect the budget plan that went to the board in September. So I think that needs to be brought into the conversation, because we're really not on. I mean, we have no plan to spend $3.7 million over what we're bringing in revenue. So I think that needs to be really clear, because the way it's being reported on this form, and I know that they've been like filling in certain things for us, but I was trying to pull back up the budget. We did not project. In fact, we actually show a little bit of a surplus on our budget. So this is not the projection for the year. That I think needs to be really clear.
Yeah, and exactly. So when I look at this, when we pull the data, I can tell you right now, I'm just looking at that 3.7. That is something that maybe we conform. What we thought we were conforming to their format was incorrect, because when I look at our budget, where we're going, this does not reflect how the year will end.
That's right. And okay, I see what you're saying.
So
You're saying that
what we'll do is, maybe a better thing to do, Ruth, you bring up a great point, is, and this is the difficulty sometimes when we present it, this is September 30th, right? 2021. So when we pull the data, for the end of that quarter, that data is not as up to date as what we just present here with the monthly. And so what we'll do is, going forward, whenever we present the 311Q, we'll have a reconciliation between what we have to kind of just give to the Chancellor's Office and what we know will be the final number.
I think that would be very helpful, because standalone, this looks a little scary.
It does.
Yeah.
I agree.
What I was trying to say earlier, perhaps I think both you and Dr. Moody were trying to say, it could be the limitations of what the Chancellor's Office, with how they allow you to report, and like the assumptions that are built in. Yeah.
And full disclosure, perhaps we, like, for example, there was one, I can tell you right now, I went back and looked at last year's 311Q, that number 2 annualized attendance, FTEs. I don't remember seeing that in the ones I looked up. So it's possible, full disclosure, that when we fill this out in this format, we might have put something in the wrong spot. But so I think doing a reconciliation will force us to make sure that this reflects our plan. Because the one thing I know for sure is what we presented today with the monthly report, that is reflective of where we know we're going to end up, at least based on the facts now.
Okay.
I had a question.
Oh, Anna.
Or maybe more of a comment. So one of the things that that I was thinking about as we were trying to reconcile that deficit, that scary number, is that when I was on the budget committee at UCSB, during that god awful long deficit, one of the things that we had with numbers, and I'm wondering if this might be a situation, was we would get some numbers and everybody would freak out. And then the budget analyst will say, no, but the state is going to backfill, some of those numbers. So don't panic right now, but we're just showing you that, so I'm wondering if some of that might be that the county or the chancellor's office are going to backfill some of those numbers, in anticipation of meeting whatever format and structure they have. So I'm not sure, but I just know.
Yeah,
that,
no, maybe
if we can-
maybe a good analogy of this to show, and we got to be more careful how we pull the data,
Right.
is because we don't do accruals the way you normally would see, like in a public company, right? You could have, we could actually book an accrual. For example, you might have an expense that's coming, and you'll book an accrual to account for it. You'll have revenue that's coming. You'll book an accrual to account for it. But because we don't do this on a monthly basis, we don't close out the quarter like we normally would for the year, if that makes any sense. Because if, for example, maybe I'm just hypothetical, we could have like 4 million that was coming in that we know was an adjustment. We would book as an accrual, it would reverse. So we don't, because of the way we close the books without accruals in that sense, the data gets lost here because we're reporting as a certain date. But what we'll do is we will reconcile this, because it is scary. I do admit that. And so I think that's the one thing, that's the one thing that will tie this into a monthly report, because if you look at, again, this is September 30th. We just looked at November 30th. It's night and day, and it's not because we missed something. It's because of the timing of how we book entries. And so for the chancellor's office, probably the most important number for them is what's their total projected at the end. And but again, it is an annual number. We probably just didn't conform correctly to their format. And I think by doing a reconciliation, it'd be a lot easier for us to catch something like that. So at this point, I'm going to chalk this up to just a bad entry in their form, which was a little bit different than what we've seen before.
And this comes to your board meeting, so this needs to be corrected for the board posting tomorrow, because we post and then this goes on the December 16th board meeting. So we will make sure we all look at it before it goes into the board agenda.
Will do. This will be corrected. Thank you.
Well, thank you. I appreciate the discussion. Any other questions, comments? Okay, last is items for future consideration. Here's where people can speak up and suggest topics. I know I suggested some at a previous meeting, and I'm thinking it might be helpful for us to, in the future, list what has been brought up so that we all know what it is and kind of remember that we'd like to get there at some point, and keep a track record on that. So are there any that come to mind now that people would like to put on that list? And I can go back and talk to Dr. Murillo about the ones we already discussed. Okay, looks like everyone's happy. Shall we then adjourn to our next meeting? Okay. I don't think we need to be formal about it. Let's adjourn.
Bye.
Okay,
Bye, everyone.
Thank you,
everyone.
everyone. Thanks.